Welcome to Crypto Minutes, your daily cryptocurrency news for February 27, 2019, presented in short videos for easy listening. We source a minimum of 5 of the best trending articles of the day, from popular news aggregator CryptoPanic.com. Timestamps and the original articles can be found in the description links below.
Did insiders trade XRP before the Coinbase listing? XRP was trading up at approximately 7% 15 minutes after the announcement, proving once again that Coinbase listings have a material effect on the price of a cryptocurrency. What was less expected was the small rally in the hours leading up to the announcement, which may indicate insider accumulation. Coinbase announced on February 25 that they would be adding XRP as a tradable asset on Coinbase Pro, following years of speculation from XRP supporters and the broader market that it would eventually be listed. Indications of a leak. Examining the charts leading up to the tweet does, in fact, seem to suggest that there was significant accumulation from insiders with information about the upcoming announcement. In comparison with Bitcoin, Ethereum, and EOS, charts from the same period show that XRP had a 6 times increase in hour-over-hour volume on Bitfinex, compared to a 2x and 1.5x increase, and a 1.5x decrease, respectively. It is unlikely that XRP would experience such a volume increase out of line with the broader market without news driving the event, hinting at the conclusion there was likely an information leak during the listing discussions. This kind of price action seems to indicate coordinated buying by larger buyers who had an idea of the upcoming news. And, it's not without precedent for Coinbase listings. Bitcoin Cash, the third major listing on Coinbase after LTC and ETH, was plagued by similar accusations of insider trading from multiple parties. Prior to the listing of BCH, there was similar price action, with the price and volume of BCH increasing substantially in the hours leading up to the listing. Coinbase vehemently denied accusations of insider trading, and after a 6-month internal process, cleared all employees of improper trading. Information asymmetry and trading. Information asymmetry and advantage is the single most important tool a trader can use to ensure profits, and controversially, according to some finance scholars, is the only source of true alpha. Cryptocurrency itself is a market driven by insiders in many ways, as there is a large body of evidence pointing to concentrations of wealth and information among those with access to high-profile companies and protocols. And, regulatory bodies have performed few enforcement actions related to insider trading in crypto. For these reasons, it is likely that the prices in the market are often manipulated by those who have insider information on upcoming events. For most traders, it is critical to acknowledge that they are typically trading at a disadvantage when there is information asymmetry. Furthermore, those accustomed to the cryptocurrency markets know that exchange listings have been a source of alpha. Many traders pride themselves in being able to catch exchanges as they list assets in order to ride the following price appreciation. Insider leaks, or worse, damage the integrity of the markets and remove the ability of honest traders to generate alpha. There are clear reasons why the rules and regulations exist in traditional markets, and major exchanges and companies such as Solidus Labs have taken steps to enforce and follow the rules of traditional markets, preemptively. A major Swiss bank just enabled clients access to cryptocurrencies. In an official statement, Julius Baer, one of the biggest private banks in Switzerland, announced that the company is providing its clients access to cryptocurrencies. Julius Baer has strategically partnered with SIBA Crypto AG, SIBA, a cryptocurrency-focused bank based in Switzerland, which raised over $103 million in September 2018. In recent months, some of the largest financial institutions in the global market in the likes of Fidelity, Nasdaq, and ICE have begun to strengthen the infrastructure supporting cryptocurrencies. Julius Baer is the fourth major financial conglomerate to enter the crypto market after Fidelity, Nasdaq, and ICE in 2019, a move that could intensify the rapid growth of awareness of crypto assets. The company stated that it will utilize the innovative platform of SIBA to provide its clients access to cryptocurrencies, and said the firm intends to meet increasing demand for digital assets. The partnership has been finalized and the institutions are awaiting the granting of the FINMA banking and securities dealer license, which is set to occur in the short term. Peter Gerlach, head markets at Julius Baer and proposed member to the board of directors of SIBA, officially said, "At Julius Baer, we are convinced that digital assets will become a legitimate sustainable asset class of an investor's portfolio. The investment into SIBA as well as our strong partnership are proof of Julius Baer's engagement in the area of digital assets and our dedication to make pioneering innovation available to the benefit of our clients." SIBA CEO Guido Berler disclosed that Julius Baer has invested in SIBA and the deal will strengthen the relationship of the two companies moving forward. Live Bitcoin News Show. We are very proud to have Julius Baer as an investor. SIBA will enable easy and safe access to the crypto world in a fully regulated environment. The cooperation between SIBA and Julius Baer will undoubtedly create value for the mutual benefit and to the clients, Berler said. In September, the launch of SIBA was highly anticipated by investors in the cryptocurrency community given the involvement of high-profile individuals in the Swiss financial sector and private banks like Julius Baer. The deal with Julius Baer is expected to lead to an increase in the number of financial institutions working with SIBA in the months to come as a way to integrate cryptocurrencies. In Switzerland, we have commitment from various authorities to establish a comprehensive regulatory environment for the development of blockchain technology and the sustainable, stable growth of crypto assets. SIBA chairman Andreas Amschwand said at the time, "What this means for crypto. Switzerland has always been a leading nation in blockchain development and cryptocurrency adoption alongside Japan, the US, South Korea, Malta, and Singapore. The integration of cryptocurrency services by Julius Baer will further legitimize the asset class to both existing investors in the cryptocurrency market and investors in the traditional financial sector." Nasdaq, ICE and other financial giants are also embracing cryptocurrencies. Speaking to CCN, eToro's senior market analyst Matti Greenspan said that institutional participation in the cryptocurrency market has noticeably increased since early 2019. The analyst noted that the commitment of major financial institutions to crypto comes during a period in which the 15-month bear market of digital assets is nearing its bottom. Greenspan said, "In the last few weeks, we've seen a vast increase in institutional participation in the crypto markets. It's as if all the major players now realize that we're nearing the end of the bear market and are now rushing to build up their infrastructure in preparation of the next bull run." Billionaire investor Mike Novogratz previously stated that institutional investors could FOMO into the cryptocurrency market in the same way retail investors did in 2018. It remains to be seen whether the same trend occur with banks in the near term. Samsung really wants cryptocurrency users to ditch their iPhones. It's now no secret that the Samsung Galaxy S10 will support decentralized applications (dApps) in addition to its hardware-backed secure storage for cryptocurrencies. But will this force Apple and other smartphone makers to also enter the crypto arms race? Samsung Galaxy S10 to support dApps. Last week Bitcoinist reported that the new flagship smartphone of Samsung, the Galaxy S10, will include a dedicated secure storage solution for storing private keys. News coming from the Samsung Mobile Business Summit in Barcelona confirmed that the storage solution will support Bitcoin, Ethereum, as well as altcoins called Cosmo Coin (COSM) and Engine (ENJ). In addition, however, the smartphone will also support select decentralized applications (dApps). As of yet, the only dApp available for Samsung Galaxy S10 is called Cosmi. Its decentralized nature, however, is questionable, to say the least. Cosmi is a Korean project developed by Cosmocon and it rewards users with COSM for leaving beauty reviews through the dApp. Going through their whitepaper, however, raises more than just an eyebrow. According to the document, customer-provided data will be stored on the blockchain. Somewhat expected, the whitepaper doesn't mention if the project will be developing its own blockchain or whether it will use an already existing one. It only says that the team is spending a considerable amount of time and efforts on research. There is also no mention of nodes or consensus algorithms. In any case, this first project featured on Samsung's Galaxy S10 does look like an attempt to capitalize on trending buzzwords rather than truly offer support for decentralized apps, which may not even really need to be decentralized in the first place. Prices surge on the news. The announcement of Samsung Galaxy S10's support for COSM and ENJ has caused the prices of both altcoins to surge notably. Engine Coin 00 has managed to gain upwards of 104% in the last 24 hours, according to CoinMarketCap. COSM, on the other hand, is also marking serious gains. At the time of this writing, the cryptocurrency has increased with around 50% on the day. Samsung bets on e-gaming. Samsung's move to partner up with Engine is likely in an effort to further the company's involvement into the fast-growing e-sports market, especially in Asia. Engine is a Singaporean-based company, which launched Engine Coin, and is creating an ecosystem for gaming. The platform reportedly has 20 million users and over 250,000 gaming communities onboarded. The Engine Coin is used to purchase in-game assets and assign ownership of them. Samsung has also partnered with game engine maker Unity Technologies in order to enable games to run smoother on the Galaxy S10. In any case, Samsung is certainly embracing everything cryptocurrency and blockchain in an attempt to sell its latest flagship smartphone. It remains to be seen if this strategy pays off, but its biggest competitors, namely Apple and Huawei, are certainly watching. Bitcoin surpasses PayPal in yearly transaction volume at $1.3 trillion. For the second time since its inception, Bitcoin surpassed online payment giant PayPal in annual transactional volume. Per the data collected from global statistics portals, the Bitcoin network posted $1.3 trillion worth of transactional volume in 2018. Within the same time frame, PayPal recorded $578.65 billion worth of payment transactions. It was the second time in a row Bitcoin outran PayPal. In 2017, the digital currency network had posted $543.52 billion more transactional volume than the global firm. Source: Reddit. Growing remittance market. Regardless of the stark difference between their performances, both Bitcoin and PayPal benefited from an increase in remittance. The World Bank reported that overall cross-border transactions grew 10% to $689 billion in 2018. Large diaspora and overseas expat population contributed hugely to the uptrend, leading to higher usage of services like PayPal and Bitcoin. Nevertheless, Bitcoin did not only serve people looking for cheaper cross-border transactions. The digital currency saw a majority of its transactions volume coming from traders. According to DIR report, the crypto sector as a whole posted record transaction volumes across leading crypto exchanges in 2018, with Bitcoin leading the pack as the most dominant asset. It is unclear how many users utilized Bitcoin for remittance, especially when traders were using the same asset for speculation. It explains how Bitcoin managed to surpass PayPal in terms of transactions volume. The latter merely focused on payment and remittance services, while the former remained a multifaceted asset. The World Bank estimated the remittance market to grow 3.7% to $715 billion in 2019. The prediction signaled that services like PayPal would continue to record higher transactional volume in the upcoming fiscal quarters. As for Bitcoin, the digital asset expects to attract significant institutional investments with the launch of regulated Bitcoin derivative platforms like Bakkt. Atop that, Bitcoin could also attract more adoption if the Securities and Exchange Commission (SEC) approves the first Bitcoin-based exchange-traded fund this Q2 2019. Bitcoin as remittance money. Interestingly, the more Bitcoin becomes an investable asset, the lesser it would attract the remittance users. It is plainly due to the Bitcoin's underlying price volatility. Users would be less inclined to utilize money whose value could change drastically within minutes. Despite the Bitcoin's cheaper transaction fee structure, remittance would most likely choose a PayPal or a TransferWise because they would ensure stability. Nevertheless, in other parts of the crypto sector, projects are attempting to solve the volatility problem. At the same time, they are retaining the cheaper transaction status attached to cryptocurrencies. Social media giant Facebook, for instance, announced that it would launch a stablecoin for remittance. If Facebook launches the stablecoin they are reportedly building, it will quickly become the most used product in crypto, said Anthony Pompliano, founder and partner at Morgan Creek Digital Assets. Just recently, banking giants JP Morgan and Mizuho also launched their stablecoins for the purpose of cheaper cross-border intrabank transfers and payments. Ready for institutional investment, TRON (TRX) hard fork will enable features that meet institutional needs. TRON (TRX), the blockchain and dApp development platform, ranked 9th largest cryptocurrency by market capitalization, is undergoing a major hard fork that will include multiple upgrades on February 28, 2019. The upgrade is dubbed the 3.5 hard fork and will include major performance features and improvements including multi-signature, account management, and custody protocols. Justin Sun, the founder of TRON and CEO of the TRON Foundation, announced the upgrade and its entailing upgrades via Twitter. TRON (TRX) hard fork is necessary for institutional investment. According to Sun, the TRON Foundation has received numerous demands from hedge funds, mainstream investors, and financial institutions. The 3.5 hard fork purportedly fills these demands by including 3 key improvements: multi-signature, account management, and custody protocols, which are necessary for institutional investment. Per the announcement of the 3.5 hard fork, the price of TRON (TRX) has reacted positively, seeing a one-day gain of over 8% from $0.024 to $0.027 on February 24. However, the gains have since subsided and are again hovering around the $0.024 price range. Will institutional investors take a liking to TRON (TRX) with its new features and protocol improvements included in the 3.5 hard fork?
Thank you for listening to Crypto Minutes. This is not financial advice. If you enjoyed the articles, please click like, share and subscribe or donate. See you tomorrow for more breaking news.